Welcome to Impact Headlines. Indian economy beats growth expectations in fourth quarter. OPEC Plus agrees to extend oil production cuts. China growth forecast revised upwards. The Indian economy surprised many, growing a significant 7.8% in the fourth quarter of fiscal year 2024, making it the highest growth rate among the large economies globally. Annualized growth rate for the fiscal year 2024 is now estimated at 8.2%, beating the IMF forecast of 6.5%. Strong growth was witnessed across all sectors, including manufacturing and construction. The current trajectory enables India to soon surpass Germany and Japan, making it the third largest economy in the world. Impact on Sri Lanka. India accounts for about 65 to 70% of Colombo Port's transshipment volumes. India also is now Sri Lanka's largest tourist source market, attracting over 154,000 tourists up to May this year. The recent Maldives-India row is helping attract more Indian tourists to the nation. The OPEC Plus agreed to extend oil production cuts of 2.2 million barrels per day into 2025. The current production cuts by OPEC Plus equals to about 5.7% of total crude supply. Current oil demand remains subdued from weak demand in developed countries, especially Europe. U.S. Energy Information Administration forecasts Brent oil prices to stay near $90 per barrel during the second half of 2024 before falling to $85 per barrel in 2025 as growth picks up. Impact on Sri Lanka. Sri Lanka's high dependency on oil imports means higher prices significantly affect its balance of payments. While the country's foreign exchange reserves have improved in recent months, they still remain dangerously low at just over 3 months of imports. The IMF revised China's growth forecast to 5% in 2024 from the previous 4.6%, with a 4.5% growth in 2025, citing a strong first quarter growth and policy measures by the government expected to stimulate the economy. According to Jita Gopinath, Deputy Managing Director at the IMF, the outlook is tilted to the downside, including a longer-than-expected property sector readjustment and fragmentation pressures. Impact on Sri Lanka. China is an important partner for foreign direct investments. Last month, the Ministry of Investment Promotion announced that Sri Lanka is expecting to sign a $3 billion agreement with China's Sinopec to build an oil refinery in Hambantota. Additionally, tourists from the world's second-largest economy are a significant contributor to Sri Lanka's rebounding tourism industry. And that's the wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.